Right, so welcome back to another stream. It's been quite a while, huh? Yeah, everything is fine. Okay, so for today, or should I say this week in particular, I would be more interested in longing the euro dollar because we are gravitating towards the previous week's high. Right, on the weekly time frame, we are bullish still. On the daily, we just turned bullish yesterday by closing above this down close candle. This down close candle traded into a previous down close candle, and as well as the bullish fair value gap right here. Okay, so I would be interested in looking for longs to take out this short term or intermediate term swing high on the daily time frame. Okay, on the 4 hours, this would be my current dealing range. Alright, if you take a look at British pound, it made a lower low, whereas we have euro making higher low. Right, so this is the British pound, and then this is the euro. Okay, so I would be utilizing this low to the current high as my dealing range. I would be waiting for price to trade back into 50%, and then 15 minutes CISD, and then we can ride the train up into previous week's high. So this is my game plan for euro this week. For ES and Nasdaq, we have to take it by a day-by-day basis because we're trading in all-time high territory, so very difficult to, I would say, navigate. CISD is just order flow, which means if you are bullish, you want to see up close candles engulfing down close candles. That's it. So you just reverse it if you're bearish. So because we are bullish on the higher time frames, once we retrace into a 50% dealing range, you want to see the lower time frame CISD, right? Because we're already bullish on the higher time frames, but on the lower time frames, a high time frame retracement would look like a bearish order flow. So all you need to do is to wait for the order flow to turn bullish again. So that is CISD. Alright, so for S&P right here, technically we're still in a bullish order flow. It's just that right now we are back into the 50% from this swing low to this swing high. Alright, we're trading around the 50%, and I think we might want to reach for the new week opening gap before moving on to something else, because personally I feel that if it wants to trade higher, it shouldn't have taken out this swing low, and the fact that it has chosen to take out this swing low, my best bet would be that we might be in a consolidation week. So for today, if there's nothing on euro, I would actually be interested in looking for a long into this fair value gap over here on ES. But obviously I'm not going to long ES, I'm going to take a long on Nasdaq. It's just that I need to see ES willing to trade higher, which is kind of difficult. And then we have the YM as the weakest. It didn't even take out last week's high. It's just stuck in the dealing range from this low to this high. We're just ranging. And then for Nasdaq, which is the most bullish, we did not take out this low as compared to ES. Right, which is why I would prefer to take a long position on Nasdaq instead of ES, and looking to short ES if it wants to turn bearish. Okay. I will only trust the long setup if ES can trade into its new week opening gap first, which means down here. this shaded area is the current new week opening gap. So I'm interested to see price do something like this first, and then show me that it wants to move higher, then I'll take this long. If it do something like this and then it just missed this new week opening gap and then comes and trade higher up here into this 4-hour bearish family gap, then I will look to take a short position down to attack the lows over here into the new week opening gap. All right, so that is the game plan for Nasdaq and ES this week. We have to take it day by day basis and utilizing the 4 hours. If there's nothing happening on the 4 hours, then I would have to trade the micro scalping session during the New York AM from 10 to 11, which is within the silver bullet timing. Right, so that's basically it for today. Let's see if we get something during the London session for Euro. I'm not too confident that we are going to get anything for the indices, so my focus will be on Euro, unless I want to trade the silver bullet of London, which is from now to 4 AM. And in that case, I would have to use the 15 minutes dealing range and then wait for a 1 minute CISD to attack this low right here, because we do have relative equal lows down here as well. And on the hourly chart, it's a very shallow run below yesterday's 9 AM's low. So I do think that we can still drive it lower after a retracement into this bearish family gap. But it all depends, right? If there's no CISD on 1 minute, then there's nothing that I can do. Okay, so let's watch and see what happens for the next 15 to 30 minutes to see if it wants to maintain this current bearish order flow to trade lower, or you just want to reverse up into the 4-hour bearish family gap. The higher odds is that it's going to retrace into the family gap, because ultimately we're still bullish on the hard time frames and we're in all-time high territory. Therefore, the probability in terms of longs versus shorts, it's going to be overweight on the long side. Okay, right. For the scalping, I'll have to switch the charts. Let me just switch it here. Okay. So over here 5, 1, and then we have 15 seconds. During the London session, I wouldn't go down into the 5 seconds. It's just not liquid enough. So the 15 seconds is the most that I would go for. But sometimes the 1 minute would be good enough. Right, so over here I have the 1 minute, so I wouldn't miss anything. Let's see. I have the 15 minutes on another monitor, so I would be monitoring the range. Let me just mark the high to the current low. I'll just mark it like this, it's easier. Okay, so right now we're in premium. Down back into the 15 seconds. Okay, so waiting for the 1 minute to turn bearish. So by CISD, in this case, I would be looking for this entire green candle to be closed below the low by a down close candle. That would mean CISD on the 1 minute as of now, right? Something might happen that might change, so it all depends. My account is on the same balance as yours. I think maybe I'll just go on the 1 minute. It's a little bit too spotty right down here, and if it can't maintain this amount of liquidity, then I think the 1 minute would be a much easier read. Okay, I'm just gonna stick to the 1 minute, and then I don't have to highlight this right here because I can have the 15 here, and then I can have the 5 here. Okay, so the range is from this high to this low. I'm interested to see if we are at OT. I believe we are. Yeah, 62 and 705. However, we can just continue to push higher. Yeah? There is no bearishness yet. Okay, right now this is the 1 minute dealing range from this low to this high. Well, for 1 minute, it would be slightly difficult, but if it is during the New York AM session, this would be the entry to take out this highs up here, 3.5 hour. But I'm not going to focus on this. All right, no more talking. I'm just gonna leave it here. I'll watch Euro USD on the side, and I think anything else is gonna happen after 3:30, so we might have to give it another 15 minutes. Alright, I'm back. So let's see what has happened. Right now I'm still bullish because I'm looking to see if this range can be respected from this low to this high right here, because we do have a displacement on the 15 minutes despite the fact that we are trading back into a hourly premium. So if you take a look at the 1 hour time frame, we're trading back into premium and we're trading into this bearish order block, which has traded into a bearish fair value gap right here. Okay, so over here we have the 5 minutes turning bearish. At the same time, it hasn't offered any form of premium yet in terms of retracement before the next impulse lower if it is going to attack the lows over here. So I do expect the next hourly candle to trade up into this wick, because we're closing this particular hourly candle in about 6 to 7 minutes. And let's see, right, if it provides a 5 minutes retracement into like this, for example, this fair value gap, that would be perfect, because we do have a bearish candle up here which took out a short-term high prior to this downside price action. Okay, but we have conflicting conflicting order flow on the different time frames. So on the 15 it looks like it's bullish. Okay, on the hourly we're still in a bearish order flow, and then on the 5 minutes it's bearish. So this is where the tricky part comes. Therefore I need to wait for a confirmation. Usually the easiest setup is when the 4 hour, 15, and then the 5 and then the 1 minute is bearish altogether. That would be the easiest to trade. But in this current scenario, it's sort of like a clash, I would say, clash. Okay, but just by looking at this candle's reaction to the bullish fair value gap, it doesn't seem very strong, because it's trading all the way to the end of the fair value gap, and right now it's even stabbing through it with such large displacement right here. Usually if we are bullish, we should want to anticipate that price would like to leave some form of gap unfilled. Okay, but right now it looks like it's not leaving the gap unfilled. It is trading all the way down, and let's see if it can close below. And in the case whereby it starts to close below, I don't think we're gonna get any price retracements into premium, because it's just going to test this fair value gaps low and then just run this phantom trend line over here, which would be unfortunate. Let me just remove the 7:30, that is for the New York AM session, and the 10 AM. So we have indeed taken out this equal lows down here, and for me this is bearish because we are unable to sustain the displacement higher. We are trading through up close candles. Okay, and then right here you can see that it's just going to displace lower without a strong retracement into premium or whatnot. So it's a missed opportunity, or should I say there was no opportunity in the first place at all, unless I'm trading off the 1 hour candles. Because if I'm trading off the 1 hour candles, I can use the OTE coupled with the new day opening gap with the 1 hour bearish order block to look for a continuation towards the downside. Okay, but right now that wasn't the case, and then we shall see if we can get any continuation lower to take out the most recent low or whatever low that is going to form here. Let's take a look at ES to see if it has reached its alright, so almost there, just a little bit more to reach for the new week opening gap. I might be able to take a position here if it can retrace back into 50%. So the swing high is over here on the 5 minutes. If I were to do something like this, I would need a retracement to at least this candle's high, which is the 5 of the gap, and probably this inversion right here would do the trick. But with regards to risk and reward, it's not that great, I believe. Let's take a look. Okay, 2R, not too bad. Not too bad, but it has to retrace here, right? So the odds of it happening is low right now, I would say. If this wick can form at least half of this candle's body, then it might be possible for a retracement. But if not, then it's going to be pretty hard to ride onto this current trade setup. Let's see. Okay, I might have a chance at this. Right. Right now the retracement is possible because it has closed above 50% of this the previous candle's body. So let's see if we can get there. This just like a probability game here. Okay, if it trades all the way down here, then I would no longer be interested in shorts, right? And I'm taking quite a deep premium at 62 instead of the 50% or the start of the inversion, because I am trading against the higher time frame order flow. So it's better to be slightly more cautious. Okay, we have made another low. Another low. Okay, so right now it's starting to scale, not scale, but it's starting to move out of favor. Out of favor meaning the risk to reward. still 2R right now, I believe. Yeah, it's still a 2R right now. Checking to make sure that it has reached its premium before dropping. Okay, everything's aligned nicely. Unless it wants to, you know, give me a pump fake. This right here should be an easy trade. I'll be looking at the 1 minute as well. Because if the 1 minute does not react nicely, then that is like a red flag. Okay, so we only have up candles for now. There's no structure on the 1 minute. We have to continue to wait. The inversion right here on the 5 minutes is actually a key. So if I see price closing above the inversion, that by itself is a red flag. Okay, because this inversion is in premium. Unless we're utilizing this range here, yeah, it's still in premium. So premium inversions usually don't get closed above if we are bearish. Okay, if it closes above, then it's likely not to be that bearish. It's probably not that bearish. So let's see, we have 3 more minutes for the 5 minutes to close. I really need to see some huge down close candles on the 1 minute, because if it keeps printing higher, it looks more like a V-shaped recovery, which is not what I'm looking for. It better not form a bullish fair value gap on the 5 minutes, right below the inversion that I'm looking at. So from, I think this high, no, this, from this high to this low right here, I want to see this gap closed on the 5 minutes. Let's put it orange, which means the next 2 minutes. We only have 2 minutes for price to overlap that green, I mean not that orange area. Okay, so this is the first 1 minute down close candle. I would like to see it follow through with more down close candles. Okay, so this by itself is a red flag already, because right now we have one tiny down close candles in the middle of, not in the middle, but right now it's separated by this up close candle, right? So if this candle is also an up close engulfing this one, then the likelihood of me being wrong on this trade idea would be very high. Okay, we have 20 more seconds to close the gap on 5 minutes. Okay. Five more seconds. Okay, the gap is closed. So right now there is no 5 minutes fair value gap, which is good. And then we have this down close candle as well on the 5 minutes. So right now, preferably this forms a swing high. Okay, we don't trade above this high, preferably, because if we can trade above this high, it also means that we're trading above down close candles, which is not good for shorts. Okay, because right now on the 5 minutes we have a separation of this up close candle, so the next subsequent candles should engulf this down close candle if order flow is to remain bearish. Okay, right now we are seeing a little bit of consolidation around here. We have alternating candles. So far, when we are trading towards the downside, the green candles are smaller than the black candles, so that is still okay. Let's see how this candle closes. 20 more seconds to go. If it doesn't form a swing high with this black down close candle, it would be pretty bad. Pretty bad for the trade idea itself. Okay, so over here we have engulfing up close candles. So let's see. Not a good look, I would say. We have about 3 minutes before the 5 minutes closes as well. At any point in time, if the 5 minutes is able to close above the inversion, then I think this trade is done for. Done for meaning I'm gonna lose on this trade. Okay, so we really want to see price engulf these two up close candles, because this down close candle has traded into a fair value gap and we are closing above it. If this candle is utilizing this down close candle as a support, well, that is a red flag. And which it did. So right now, let's see if we engulf this down close candle. At 412. So usually when we trade all the way up into OT, oops, let me just remove the number. So I was saying usually when we trade all the way up into OT, the next leg lower in this case would be very fast, but in this case we're not having that. Okay, so second down close candle. Let's see if we get consistent down close candles, or do we get like a up close. And preferably, of course, we would be consistent down close until we can engulf the two up closes. Okay, we have 30 more seconds to confirm the swing high on the 5 minutes. Price has traded all the way into 50% of this down close, and then it's forming an up close right now. What is it? So if we trade above this high, then I think it's over. It's gonna gravitate straight towards my stop loss. That's how I feel, because the 5 minutes is not looking too good for my shorts. Okay, so price is utilizing this down close candle right here, which is not what we want to see, right? Especially when this down close is in premium as well. Okay, so premium from this low to this high. This is a premium down close candle. If price is to be supported by premium down close candles, then it is more likely to be a reversal towards the upside in this case, right? So usually discount down close candles are stronger, and if the supposed weaker down close candles in the premium can support the price, that means it's not good, right? If I'm in shorts. Okay, we ran out a stop right here because we have, supposedly, if there is no consolidation right here, price needs to close below this green candles in order to turn bearish. But because right now we have taken out a short-term high, this this up close candle becomes a valid bearish order block if we can close below. Okay, so I'll be looking to add another position once we close below this up close candle, and I'll move my stops to this high right here. I'm gonna put it like this, and because it's a wick candle, I'm gonna use 50% of the wick as the pyramid entry, looking for the same target. Okay, so same thing on the 15 minutes. It's a up close candle, so preferably this is a down close, or we have two down close candles engulfing this up close candle. That would be the best case scenario. Okay, I need to see a closing price below this low right here, and that would be the confirmation to move my stops, and also to pyramid in a second contract. And preferably, you know, over here on the 5 minutes, we are able to engulf this green candle. Because if you're not able to do that, then it's gonna be a problem. Because this green candle is inside of this black candle, which means it's a small green candle. If it cannot even engulf a small green candle, then it's weak towards the downside. Okay, I'm gonna have to prepare myself to enter the position. I'm gonna hit the sell soon. Just need a close below. If it stops me out, then I'll be done for the London session. Okay. Oh, we close right at the low, so I have to wait for the next candle. 5 minutes candle is not doing so well right now, but let's see. Okay, in 20 seconds, excited to pyramid in because it looks like we're gonna close below. Looks like. I need a down close. I can't have a doji. Come on, don't give me this candle right here. I need a down close, not a doji. I'll wait for the next one. Indecisive candle. Oh no. Come on. 20 more seconds. 10 more seconds. Come on. Oh, I think it's just gonna run for it. Might not even retrace. Okay. Gonna put the orders in. I'm gonna shift this buy stop down. Okay, now let's wait. All right. I guess no retracements for pyramids. Unfortunate. Because if you take a look at the 5 minutes, we're already trading to the wick. Okay. So this wick right here. The likelihood of us trading into 50% of the wick and then retrace into my entry and then lower again, it's gonna be pretty wild if it's going to do it. Therefore, right now at this point in time, I don't think it's gonna give me the pyramid entry, but instead it's just gonna trade down all the way to the new week opening gap. And personally, I want to see price just hit my exit right after it touches the new week opening gap, so it's just gonna teleport through, because if it hangs around this area or it gives like a reaction inside the new week opening gap, then I might be missing out on this exit right here. So because it can just tag the new week opening gap and then reverse higher, you know. I put the exit based on the fibs from this high to this low right here, and then it's at 0.15 because this guarantees me 2R whenever I enter off the 62%. So minimum would be 2R, but obviously once it gets down to the new week opening gap, I think I'm going to move my stops to at least break even, which means I'm going to remove that sell limit. It doesn't make sense, right? To trade up all the way there after tapping into new week opening gap. At the same time, on the 15 minutes, it's pretty clear that this is a immediate rebalance condition. Therefore, you see the next 15 minutes candle displacing lower pretty aggressively. Immediate rebalance, meaning we have a CISD and or market structure shift. There is no fair value gap. The next candle just trades up all the way into the previous candle's low in this case. So right here would be immediate rebalance. There is no fair value gap, no inefficiencies. Right, so usually in these cases, this candle and the next subsequent candle would be the time limit for price to continue in the same direction aggressively lower, because if it doesn't, then it could be reversal. It could suggest reversal. So right now we are seeing this retracement, and then the very next candle it just displays lower without any strong retracements, which is what we want to see in terms of immediate rebalances. But then there is another thing called the implied fair value gap, which would be the 2 weeks 50%. And then over here between the 50% you see a tiny little gap. That is your implied fair value gap. So I would say that it's kind of like a blended entry whenever immediate rebalances occurs. Sometimes you get the implied fair value gap as the entry, but sometimes it's just way too aggressive that it displays right on this candle itself. Then you would probably not get the implied fair value gap entry. This is what ICT taught anyways. Therefore, I guess it's safe to assume that inversions and implied fair value gaps are the strongest fair value gaps as compared to just open and normal fair value gaps, I guess. Because they have something behind them. Open fair value gaps are more like inefficiencies, and I guess they are more suitable as targets rather than entries. Just my personal opinion. Yeah, this are all way too complicated, and personally I don't even use them as my entry mechanism. Yeah, I only use the order blocks. But it's very useful to take read and to, you know, have confirmation that that you're in the right side of things. Okay, so right now I would be surprised if price came back up and tagged my pyramid entry. I would be very surprised, okay? Because at this point in time, I don't think it's gonna retrace all the way to take out, or should I say to remove this entire displacement. I think it should leave some gap above and then drop lower. I mean, I'm mentioning the gap based on the 5 minutes fair value gap. My entry is all the way, I mean my pyramid entry is all the way at the old inversion right here. Well, the only concern that might stop me out, I mean, not concern, but the only thing that might stop me out is if NASDAQ decides to trade back into the 50 minutes premium fair value gap. Because that would pull ES up together. And then that might in turn stop me out. So if we take a look at the NASDAQ real quick, on the 50 minutes, it does have this open fair value gap that it might want to trade into, because this sell close candle is an inside candle of the previous candle right here. So yeah. And obviously if that happens, then I'm going to end the stream, because that would be a very bad condition to be trading. I hope I don't have to wait for the macro to be able to see my limit get filled. 30 seconds respecting. Yeah, maybe. Isn't it a little bit too premature? But maybe that's based on your experience. I can't judge that. Oh, so you're on NQ. Takes me out. You mean taking you out in terms of price or your manual intervention? Do you take out yourself, or NQ take you out after delaying? Oh, it went to your break even. Wow, that means you trailed stops quite aggressively, huh? Let me just take a look. Yeah, it's quite aggressive, your stops. Interesting. I think once we can engulf this up close candle, the move should start. But right now we're not seeing that happening yet. But then again, there is no running of any swing highs over here yet on the 1 minute. So it might just range for a little bit more. Might have to wait for the macro. Boring. Oh. Okay. Just so sudden. Right, not too soon. Don't be happy too soon, right? It might just retrace back. Okay, so the good thing is we are making lower lows right now, but we're still, let's see. Yeah, we're still not closing below this up close right here. I was happy too soon. Okay, we have two swing highs right now on a 1 minute. This one and this one. So let's see if we can do like a stop hunt and then lower, but respecting this range, of course. Again, I don't think, okay, if it is to run buy stops, I don't think it's gonna take out this low right here. I think this low should be respected based on the structure itself, because if it takes out this low, then I guess we're gonna just teleport through below this lows here. Just my opinion. Oh, okay, so we finally closed below the up close candle, and that is good enough, but let's see. We have 5 more minutes before the 50-minute candle closes. Preferably it takes out the swing low before it closes. Alright, and here we go. The 5 minutes candle closing below the consequent encroachment of that wick that is highlighted would be the key, I guess. The key to expansion. No, we're not able to close below yet. We only have 5 more minutes to the next, till this current 50 minutes close. So let's see. Oh. Ten more minutes for the macro. It's still quite long. 10 more 1 minute candles to go. It feels like it's gonna do some funny business, because this is the second candle that's trying to close below this swing low, but it's unable to do so. So this is the second attempt. If this candle by the third attempt is still unable to close below this swing low right here, then we are going to trade out here. Oh, finally. Okay, let's get the expansion started. We only have 3 minutes left for the 15 minutes candle. This is going to be another inside candle if it is going to close like this. Hopefully not. Hopefully it's not an inside candle. I mean, it might be a good thing. Might be a good thing to form inside candles, but I don't wish to wait that long. Because if it forms an inside candle, it also means that the expansion is going to be large range. Did we take out the low? No, not yet. Last 30 seconds. I thought it's gonna give me an exciting candle. You know those candles that spikes. No? Man, it's really gonna stay inside the range. Okay. Okay. Uh-oh. We have equal lows. And then we have the macro coming up. We have 2 inside candles. There is a possibility that price might want to leave the equal lows down here and then coming up here and then lower again, because from here to here there is OTE available. So if we draw this anchor, it didn't even reach for 50% right here. Yeah, correct. So there's a likelihood of us trading back into OT before dropping lower, but this is the invalidation. Okay. Oh, my entry just falls right at the 79%. Cool. But obviously that would be very ugly. I wouldn't want to see that. I would just like to see price just, you know, spike through, give me my exit, and then I'll just end the session. Yeah, waiting for a close below 426 candle. 426. Where is 426? 426. A close below this. I'm not waiting for a close, but what do you mean by me waiting for a close? To do what? Is there any context to why you're asking this? Because I can't frame a context for your answer. Ooh, yeah, something like this type of candles, but oh no. As I was anticipating, I might miss my exit right here. So right now I'm gonna remove this sell limit. Okay, I'm just gonna let it run. Okay, I have to relax. I have to trust my model, and I'm just gonna have to let it be, you know? That's hilarious. Okay, so we tag the new day opening gap right before the macro. Oh, that's interesting. Okay, if we can close the 5 minutes above the 50% of the consequent encroachment, I'll close it. Alright, how about that? One more minute, just one more minute. NQ is what happened to NQ? What's happening to NQ? I don't see anything happening to NQ though. Alright, 30 more seconds. Preferably it closes below 25%, but obviously if it closes, let's see. Yeah, that's true. Oh no. Looks like it's gonna close above 50%. I'm gonna get ready. Alright. I will surrender. I should have known. I thought it was gonna spike lower, you know. It was just 1 point below the perfection. Sometimes it's just, oh well. Okay. Let's see. For today, just a miserable 200. It's the new week opening gap. Right here, new week opening gap. And initially I already had this bias, right? Once it tags the new week opening gap, I'll be looking for a long entry, which is why I was only targeting just 1 point below the new week opening gap, expecting it to, you know, just color outside the lines a little bit, but turns out it wants to respect it that to perfection. Then I can't do anything, right? There's nothing I can do. Okay, so right now we would be looking for longs for the rest of the day on the 15 minutes to take out these highs. Okay, that would be the game plan. For euro, I think it's, let me just take a look at euro. What? Oh. Yeah, we're still really far away from the 50% on the 4 hours, which is not good because it might mean that I might miss this move towards the previous week's high. Oh well, we'll see what we can do about this. Let's take a look at S&P. 1 minute. nothing much. What about NASDAQ? 1 minute. Nothing much as well. Okay. Bias on DXY would be bearish because I'm bullish on Euro. Okay, I would like to see if my analysis for ES is correct. Right, as long as it does not trade back down this low, it means that my analysis is correct by closing early. Should have just looked for a low-hanging fruit, but it's okay. Another trade will happen again. I mean, it's gonna repeat again. Oh no! Oh no! Because if it runs this low, it's gonna overextend by a lot. That's how I feel. Closing back below the 50% would guarantee price running lower. That's how I see it. Because as of this point in time, it should not close back below the 50% of the wick until it takes out this swing high. For me, this is just from external to internal, and then probably external again. So for me myself, I closed early because I don't want to sit through this and then like this, you know, I don't want to sit through this retracement. Oh, it's closing back below the consequent encroachment. That means it's going to go lower again, I guess. Well, maybe something that I can improve on is that when I see this low grind lower, I should have minimized my expectations. Yeah, I can improve on that. Okay. I think I'm gonna end the session soon. There's nothing else to do. Let me just double check. On NASDAQ and Euro. Wow, stick and destroy. Okay. S&P, nothing. NASDAQ, nothing. NASDAQ is much more weaker. Is it? Looks like it. Oh. Just one. Looks pretty bad. Oh no, it's going lower, which means ES is going lower as well. I think if we can close below this 4-hour bullish fair value gap, it's gonna bring us down here and here, probably. So Monday expansion higher is actually just a Judas swing. Nasty. Not seeing a setup. Might have to wait for NASDAQ. I mean New York. Yeah, you're right. I'm not seeing anything at the moment right now. Yes. Frustrating. Supposed to be a more gentleman market. Instead it's giving me this. Let me see. I think I'm gonna blame YM for this, because YM is not moving. Oops. If you take a look at YM on a 15 minutes is seek and destroy. So it's not doing anything. I guess that's why. Has it reached its limit? Let's see. Maybe, could be. Oh, I didn't saw this. Okay. Do we have like a 50 minutes? Oh, what? Okay, never mind. Alright, I'm gonna stop here. I'm just getting addicted to the charts right now. Okay, I'll see you again during the New York session if life does not get in the way. And that's it. Hope you enjoyed this, and I'll talk to you again.